Hi, Warriors. James Wilson, Angelo, Alexander. How you doing, Ryan?
Hey, Dale.
How you doing?
Yeah, good, mate. Busy morning.
Yeah, I want to start off with U.S. dollar yen. You see my screen?
Yep, all good.
Okay, so we're above the intervention levels from this day. Were they checking rates or doing anything? I noticed there were some like pretty good spikes, like this candle and this candle. Anything out of BOJ today?
No, nothing. Couple of comments from Suzuki. Same old.
Okay.
As expected, 146 has carved through without too much fuss. Probably triggering a lot of people thinking it's going to be an intervention level. Just needs to be reiterated. They're not picking numbers. They're all about the volatility.
Okay. All right. And cable recovered after the comments of ending the emergency facility, and doesn't look bad, the pound, does it?
We could probably do another whole show on that.
Yeah.
It's a right circus this morning.
Yeah. So, it looks to me like, I don't know what gilts are doing today, and I don't have them up there, but 10-year.
Hey Dale, good morning. Yeah, you're talking about gilts. Brian made actually a great point, yesterday that the gilts look just like US Treasuries. And yeah, they do. And I actually posted a chart this morning in our chat room and just showing they look exactly the same. So if you're thinking the gilt market's moving, something crazy, Ryan pointed out yesterday they're really not. So
the magnitude that day was bigger than what we saw in U.S. sovereign debt. I think that was the only difference. That one day was magnified.
Yeah.
Right?
Yeah.
But otherwise, if you look at a long-term trend, they are. The only difference is in rates. I think the gilts are about a full point higher than the 10-year.
Yeah, close to. Yeah. Yes, they're all thereabouts.
396. Are they around,
UK 10s 454, so about 60 cents. Yeah.
Okay. All right.
So there is some premium in there, obviously. But,
okay.
What's been surprising today, sorry mate, is we've come through all these headline jumping around on the bond program and Truss doing a U-turn and all that sort of stuff. So Truss has said that she's not going to do any U-turns. That was what saw cable get bid up earlier on. And we know now that the Bank of England is going to end purchases. So that's pretty much two headlines that have been the negative factor all the way through this. Yet cable is keeping a bid.
Yeah, it is.
If you're in our chat room, we've got some potential info in the Flowonomics room. I'm not going to give it out here live because this is in pretty much insider talk. But there is a potential reason why cable's holding up here. So if you're in a room, you need to go and check out the Flowonomics room.
And, I can give you the reason.
I'm buying. No, I'm kidding.
The reason is because the market realized that they're not foolish enough to keep creating more inflation while they have the highest inflation in the developed world.
Yeah.
As simple as that.
So you mean they're going to start running surpluses? Nice.
No, but I mean that with inflation having surpassed 10%, if they actually went into spiraling quantitative easing, I have no idea where inflation would end up settling or not settling.
Yeah.
Yeah.
And I'm assuming that the market also believes that since they are abandoning the idea so soon, they have reasons to be optimistic that the market is not going to break down. Because I believe the market believes that if they did believe that by stopping quantitative easing, the financial markets would go bananas, they wouldn't be doing it no matter what the cost.
So Steve, hey guys, I'm gonna interrupt here. So Steve, we talked separately yesterday about the Bank of England and what Bailey did. And by the way, I've from what I understand, Andrew Bailey is like Ryan's. Like Ryan, didn't you get a T-shirt with his face on the T-shirt? Like he's like your number one guy now, right?
My number one guy.
Yeah, he's like your idol now.
Yeah, I got posted on the wall.
You do? Okay, yeah, I figured as much. Like in a two-piece bikini, maybe. But so we have Andrew Bailey. He makes these comments that throws the market, the entire market, not just the sterling, the FX market, stocks turned around. And Steve's like, Steve, what did you say after you heard what Andrew Bailey said?
Good for them.
Okay.
They are less incompetent than I thought. Still
Yeah, right.
incompetent.
Yeah, exactly my thought. It was the right thing to say. Sort your shit out and get on with life.
Yes.
Right. Okay. So Andrew Bailey does that. Now here's where I have the issue. It's fine to say, and I think it is. You're right. Just kind of like let's just get it done. It's ending, but to give the market a date, and like you have
3 days till you get out of town.
Yeah, that's like that should never, like, central bankers shouldn't say that. They shouldn't put a timeline.
On the other hand, if you don't give a date, they might think that you're bluffing and you don't really mean it, and the date is going to be indefinite. You're just saying.
Well, then we got an FT article overnight, like when I was just going to bed, an FT article going out saying that the Bank of England called private bankers and pension funds and said, we'll give you more than 3 days. Now I was going to sleep, so I didn't get a chance to read that, but isn't that true, Ryan?
Right. Well, this is the big thing, because it all got twisted around. Okay. The market took Bailey's comments as being negative. You got 3 days to sort this stuff out. Then the FT article dropped at 5 a.m. saying that they'd had private conversations with bankers about giving extensions. And the market took that as positive, hence why cable rallied overnight. But the comments the FT cited about those discussions on extending
are from sources
happened before Bailey made his comments. So Bailey's comments supersede what the FT wrote.
Yeah, more recent.
Posted it after the actual. You go in it. It was Bailey's comments were the final word, and that's what's come out today. And you can look in the trade room and in the chat room this morning. I've been trading that way all morning because the market had it wrong, and if all the commentators had it wrong.
Okay. So you've been trading it like that. Like, what do you mean? Does that mean you're selling sterling on these rallies now?
I hit the rally. I would have loved to. I actually got stopped out because I was short last night, as you know, going into it, and I got stopped out on the FT spike. But if I'd have seen that story live, I would have been all over that, because it was completely wrong. The comments came before Bailey's, and that was the important factor. So every time the headline came out saying if the market went up saying, they're going to extend, I'll sell that. And then when the market came out saying Bailey's not going to extend, I hit that as well. And then I flipped it on the rumors of Liz Trust into longs. Apparently she was going to go into a U-turn, flipped long, got out when the denial came out.
So look, just let me sum this all up for you guys. It's been really active for the last 24 hours. Especially if you're not glued to what's happening, make sure you guys are registered for the Flow Show, because it's Ryan and Stelios, Steve, if he can make it, and then K-Man are there, and K-Man's out this week because he's in Belgium, I believe, visiting family. But come check out the Flow Show. It's about what, 3 hours ago, Ryan?
2.5 hours. 2.5 hours ago.
Okay. Yeah. So make sure you guys check it out. And this way you can catch all these guys live as it's happening. I wish I could. I unfortunately was, as I normally am here, sleeping. So
lazy.
Look, I know I'm being lazy. That's right. Dale is definitely lazy. Dale,
Yeah.
Dale gets up every day at like 4. I don't know why he doesn't get up at 2, huh, Dale?
Well, I want to let the owl have peace before I get up and turn the lights out.
Right. So hey, listen, we got producer prices coming out a little bit later this morning, and then we also have FOMC meeting minutes, which I think we'll have to pay attention to, because as we approach the potential that we have, you can see equity markets are extremely weak. You've got financial conditions are very tight. Mortgage rates in the US are nearing 7%. You basically everything's slowing down to a creepy crawl. Now everybody's looking for a Fed pivot. So that's why all the comments from like if you start listening a little bit closer to what's happening in the meeting minutes, people are going to start nitpicking specific words that come out from the meeting minutes. So, I didn't care about the meeting there. When you look at an economic calendar, so if you go out to, any economic calendar and you look around at all this data, what I've learned in the last 20 years of trading FX specifically is that data matters, and most of it matters at some point, but it's at different times. Like, I could care less what the meeting minutes were saying, a year ago, or even, 6 months ago, because we knew that what everybody was thinking. But right now, this is like one of those transition type of periods where we have to start paying very close attention to the words that are coming from each of the regional Fed governors. So that's one thing. Producer prices, here's another thing. We've got producer prices that are coming out today. Well, actually, I should probably go back over here. So with PPI, now this is a precursor to the CPI. What do you guys think about today's data? I mean, we've got the core PPI here, as you can see, the month over month for core and headline PPI, and then we're also going to get year over year readings as well. Since you guys have been up earlier or longer than Dale and I, and you've had time to process what's happening today, how important is PPI today to you guys? We can start with you, Sal.
I said on Flow Show today that I think that PPI is going to start becoming more important than CPI because it's leading. And what the market's trying to do now is figure out when this turn in inflation will come, and which means a turn in the central banks. So I think obviously CPI is the big number. Everybody looks at that. But I think personally PPI will show me when things start to ease maybe. And at the moment they're not, but I think PPI will go first, and then we're going to see CPI turn probably end of the year or maybe early next year or something like that. Let's see.
Okay, so since everybody's looking for a turn in inflation, today might be rather important. What do you think, Ryan?
Yeah, I'm the same. It's going to be a lead into the CPI. Whatever happens, so the market's going to change expectations depending on what this number is. Is it going to go up, or are we going to see this divergence between core numbers and the headline number that we saw in CPI, where the headline is dropping but the core's going up? Who knows? But it could be a decider for tomorrow.
Well, you look at like the rest of the FX market here, and I'm just going to remove this really quick, and it's tight. Like you look at the euro, really tight. Aussie. Here, let's get rid of this. This is the extension of the flag. If you guys don't know what the Aussie looks like that's a bear flag, and we're in breakdown territory. We are at 161% extension. However, yesterday just, that was a blip higher, but we rejected where we needed to. But if you can see the Aussie, it looks pretty bearish, but very, very tight consolidations, right? Now the outlier is the dollar yen, and everybody's sitting around waiting for some sort of intervention. When I was in the chat room yesterday, the dollar yen was spiking above 146, and you know, people were in the chat room thinking last night, oh, you know, hey, we should fade this after the initial breakout. And I'm like, I'm not touching the dollar yen here. The dollar yen is, you know, it looks like it will extend to 147.40 at least, which is 127% extension. But as I said in the week ahead video, it looks like we're going to at least 148, which would take us to 30-year highs. What do you think about all of that, Dale?
Well, I'm laser focused on it because the yen's doing this and the dollar still has the potential of it being a failing rally. So I know the yen looks great, but you know, if we're close to these topping levels, I was thinking 46.80. I mean, we're almost there now, but I think when the yen rolls over will be the kickoff of the next wave down in the Dixie, without taking out the recent highs of, what was it, 114.50.
Now, if you delete all this mess that I've got going on, and I mean, I can just start kind of removing some of the old drawings, you know, that we've had for these are drawings that you guys know have been there for months. But if you just take a step back and let's even remove this for a second, you can see this is an ascending wedge.
Yeah.
Pretty clearly, right? So being in an ascending wedge, that is a reversal pattern,
potentially.
Setting up, but there's still a lot of work to do. I mean, you know, if you look at this, we could go to here, and this could end up being several weeks before we roll over, right?
Or it could roll over here without going to, you know, it doesn't look like it's going to take much. That horizontal black line you have, Blake, that was a breakout. What's that level?
That's 40. At 140. That's 145.90 actually. That's what it broke last night.
Okay. So the first sign that there's something wrong with the yen is closing under 45.90. A false breakout is something I'm looking for. We'll see if it happens. It's something I'm alert for. And then I think, you know, since this has been the strength, Canada's not making new highs. Aussie may have another low, but no, the euro's still 250 away from its
so
low.
So I guess what we're gonna have to wait for is for you know, we're gonna have to wait for PPI and CPI. I mean, because people are really kind of sitting.
And
on
I think yields are peaking too, Blake.
Well,
so I think that'll come in here at least short term. There, I think there's a
wait. What'd you say?
Yields are peaking.
Okay, well, I'm going to argue that in just a second, but okay. Ryan, do you have any thoughts about the yen? I know you're not K-Man's the yen whisperer, we could call him, but do you have any thoughts about the yen right now?
Yeah, it's as expected in terms of creeping up. You know, nothing volatile. I'm a bit lower down. I think 145, 144.90 is the.
That's been a bullish wedge. I mean, you know, if you guys didn't know that the dollar yen was sitting in a bullish wedge, it's something that, you know, I mean, it's very, very, you can see that's the breakout last night. I mean, it's something that we've been talking about like literally for the last, you know, several days. So, I mean, it was just a matter of time before it broke out, but you don't want to be bearish here, do you, Ryan?
Well, I'm building a bit of a long-term trade short.
Oh, you are?
Yeah, I'm keeping it small and wide. I'm going small and wide. If we get to 150, I have a little assessment.
Okay. So you're I mean, it's really small. Okay. So you think you're looking for a reversal longer term, but you're starting to build a long-term reversal.
Yeah, it's a bit the old FOMO. You don't want to miss out trying to get higher levels. So I'll keep it small and spread it out. As I say, if we get to 150 and break 150, I'll have a little assessment to see if I'm right or wrong. But yeah, I think that the market's got to do a lot more to get more hawkish than the Fed already are. I still think we're going to see the data, the CPI inflation moderating a bit. Not saying it's going to start tumbling, but I can't see it putting on the same levels of gains that we've seen over the last year or so. So,
yeah, I get what you're saying. How's the carry for you overnight?
Not too bad. Not too bad.
Okay.
I'm keeping a close eye, obviously.
Steve, Stelios, you guys have any views on the yen here about this, move that we're seeing? It's obviously it's a breakout. So, but how do you feel about it?
I'm going to say
most obvious is obviously wrong. Joe Granville.
I'm going to say what I say about a lot of other things. I'm not going to fight this trend. There's no signal for me that something has changed either fundamentally or technically, so I wouldn't fight it.
Okay.
Sorry to be boring.
I think that we obviously remain in a very strong uptrend. There's no question about it. But momentum has clearly stalled, and I think that any attempt to actually accelerate higher once again should be met by another intervention. So although it's very hard to fight this trend on one hand, on the other hand, I think that it is very, very, very irresponsible to start chasing it up here.
Well, one of the ways to fight this trend, if you want to fight this trend, one of the best ways, in my opinion, is not through the yen, and it's going to be through gold. Gold is one of the best inverse relationships between the dollar yen, in my opinion and in my experience. And what gold is doing is it's holding its 618 retracement. I'm surprised.
Great idea.
Yeah, I'm looking at. Thank you, Dale. I'm looking at gold right now, and you can try to get ahead of it and try to buy it here. But my opinion is why. If you want to really fade the yen or the this move, in the yen, then buy gold on a breakout above whatever this high is. 1683. It's holding above the 618, and my assumption would be if the dollar yen is heading towards 150, gold is going to break down. So gold will see 1620 again. But if we see some dollar weakness, instead of fading that really, really strong trend in the dollar yen, buy gold, because then what's going to happen here is we're going to end up getting this false breakdown that we've been trying to do for the last couple of weeks. And then we're going to get a break above this this descending trend line and then really start to scream higher. So I think gold is the trade. That would be my opinion. You guys have any thoughts on that?
Concur.
All right. That's it. I love it when everybody agrees. All right, cool. So
they didn't agree. They're still nervous about gold. They're looking for new lows, the crowd.
Yeah, let's and I think a lot of people are. And look, gold I think is holding up really well. Even if you look at how the dollar is doing, I think gold's holding up really well here, and it's something that has to be watched. The only reason why gold is not going higher at this point is just the dollar. It's just this insatiable rally that we see in the dollar. Just because Dale, you weren't pulling them up. Here's the gilt market, and here's yields, and then you can do this.
Put up the long bond.
Well, here's the let's see. This is the 10-year. So here's your 30-year. You can see they look exactly the same, right?
Yeah, they've made new highs. Yeah.
But this is a 30-year, 10-year gilt, so I can put in the 10-year, yields for treasuries, and that's what we've got. Ryan, do you have any last minute thoughts on the bond market here?
Yeah, this is probably one you want to watch over the PPI and the CPI. We've made a potential double top, even though it's short term up there. If we get hot numbers,
you don't read this as a bullish bullish wedge. I mean, everybody calls double tops way too early. If something hits a high and hits the same high, everybody's really quick to call it a double top, where in essence it could end up just being a wedge. And that's why I get a little nervous when people say that. So go ahead. What were you saying?
Yeah, I mean, we're only talking short term. It's only like a 2-day top. It's not going to change the market really. But when you're looking at price action, if you're trying to pick tops and bottoms, you want to find levels where it's being confirmed. And at the moment, whether it lasts the next 10 minutes or the next 10 years, it's found resistance up at those levels. Some reason it's not going any higher. If the PPI, CPI data can't push it higher, and it's hot CPI data, then you've got to ask a question: what's the reason it's not going any higher?
Yeah, I agree with that. Okay. So we have some near-term resistance. Now, I'm going to give you guys a little bit of education on double tops and double bottoms, because I think people, like I said, are very, very quick to call them. Whenever you have a double top or a double bottom, you have to look for a neckline. So in this case, the neckline is here. Now, the reason why this is important, because we may have some resistance here. The way you fade it is below, this ascending trend line, maybe back towards this this support, right? And it's good to talk yields here, just in case we do end up peaking because of inflation here over the next couple of days. So let's say we have this high, and then once you breach this neckline, then you have a double top, and then you have actually a measured move to play off of. So then it takes us down to 310 on the 10-year. That's a pretty far drop in yields, and that's not going to happen overnight. But that's how double tops or double bottoms work. That's something that I'm a bit of a stickler on when it comes to technical analysis, because Dale knows we've studied the Bible, right?
Dale wrote the Bible, didn't he?
Dale was professing the Bible at some point. Back almost BC, right? Dale, I don't. He didn't get. He must have ran out for a potty break ahead of the data. All right, Stelios, last minute thoughts before the data comes out. You got 4 minutes here.
I do agree about your gold idea. I just need to see confirmation. So above 1690, really.
You're always so conservative.
I'm sorry, but you know what? Recently, it's been. I don't want to say it's been the right call, but it's been the right call, right? So you have to be a bit more patient. What do I think? I think for choice-based data will probably continue to surprise to the upside. But as I said before, I think we're getting close to the level where we're going to see inflation peaking, and it will be led by PPI. So,
and one thing I want to really point out here, just when you look at the dollar and you go, wow, that's a nice channel that you've seen for the last since 2021, or basically the last 8-9 months. That's where we're at, right? Nice ascending channel, very bullish. But look at this black channel. If you can't identify the channel that's over with that's being touched by the black line, that's actually a 20-year weekly channel, right? So if you want to know how important these highs are for the dollar, that's how important they are. So when you have people like myself or other traders like saying, hey, watch the dollar here, this is a really big inflection point. The same can be said for the dollar if it actually breaks out. Like we start getting above 115, that's when you start getting the blow off top type of mechanism in the market. And my opinion is that is entirely possible in our market. Like in this market that we are in right now, the dollar could very easily take out like the 115 level and start racing up towards 120, and we could see some sort of eventual blow off top. But you know what that's going to coincide with? Some serious risk aversion, right? It's going to be like if the dollar just starts taking off like that, that is going to be a good sign that the market is going to probably absolutely crap the bed and capitulate.
It's going to happen when Steve comes over to America.
What's that? It might happen.
He needs to buy some dollars, doesn't he?
There is a couple of days. Steve and his wife and kid. Well, hold on. We'll talk about this here in a second.
30 seconds almost.
30 seconds. I need
40
to pull
seconds.
Up the data flash. This comes with your ForexAnalytix subscription right here. We're going to keep an eye on that. Let's pull up. We have 3 charts. Let me get this dollar chart back over to a 15-minute. Let me zoom back in. You can see the dollar reaction here. And let's move that data flash over. And you guys help me out when the data is coming out. Stand by.
Standing by.
I'm sitting by. Is that right?
You're just gonna sit by. There we got the yields right in the middle. If you're following, oh shoot, that should be a 15-minute chart. Damn it. Okay, there we go. Data. Yields are slumping a little bit.
PPI
8.5 on the headline, 7.2 on the core.
PPI 0.1 lower.
Strong data, guys. Strong data. So why is, let's see here, the dollar rand just popped. Dollar is just popping across the board. We got some strong data. So what are we expecting tomorrow out of CPI? Look at stocks are going to come down.
I think it's a bit mixed, honestly. One up, one down.
Why? Because the year over year. I mean, I'm looking at the month over month data. I'm looking at more, you know.
Oh no, don't look at that stuff. Look at the year on year. Year on year is up a pip on the headline, down a pip on the core.
Yeah, who cares about the year over year? I'm talking about like, because we're focused, laser focused on what's happening right now, like that's in the near term. So, but if we have, you know, a tick up in the actual PPI by 0.2, and then the core PPI, which, you know, did come down, but it came down with expectations. I mean, that's a strong number as far as I'm concerned. So I don't know, but do you guys, Ryan, you're reading it differently?
I always look at the year on years. You know, it's the same. That's what the Fed look at. They don't have a monthly target for CPI. It's the annual target.
Okay, so you're gonna say don't get too carried away at these levels right now.
Yeah.
Okay. All right. Steve, Stelios, Dale, any last minute comments before we head out and let Dale take over here?
I think things remain extremely obvious. The labor market hasn't rolled over yet in a way that will force action now. Inflation remains extremely strong. I'm going to say it for the 100th time. I think it's extremely dangerous for people to try to hope and try to time a pivot upcoming, you know, any week now.
Yeah.
So we should remain the course. We should resume trading in the direction of the trend, which I think remains quite clear.
Okay.
Especially for equities.
Thanks, Steve. Just FYI, gold continues to hold above that 618. So we didn't even, we probed a little lower, but it's barely moved. It moved like $3. I mean, and that's pretty good for gold. I'm surprised gold is not lower. And so
yeah, with the yen making new highs.
I think the CPI 0.1 better is offset by the core. Is the PPI 0.1 better is is offset by the core PPI 1.1 weaker. So I think it's a non-event today.
Okay.
But I agree with Steve. The trend is still there.
Guys, just hey, we got to pass it back. We got to pass it over to Dale. He's got an interview. Look, make sure you guys check out the Trader Funding Program. They're today's sponsor of today's show, but also make sure you register for the Trader Summit event. It's October 21st through 23rd. It's free, and you're automatically registered to win one of 2 iPhone 14s, which is really cool just for registering. And check out the speakers that we have coming up. We have Danielle DiMartino Booth, Peter Schiff, Mark Minervini, Tracy Schuchart, Helene and Mish are going to be doing a panel together. Those are the 2 like lady legends of Wall Street, man. It's going to be awesome. We got a lot of macro guys. We're going to have Danny Blanchflower and Peter Schiff with a debate on monetary policy. That's going to be interesting. A lot of currency guys, a lot of like Jim Bianco, great macro minds that are going to be here. Gareth Soloway talking about cryptos. It's going to be a really, really awesome event. So make sure you guys come in, register so you can be the first ones to get the recordings. Because if you're not going to be around, you don't register, well, you might get the recordings like
Danny looks like 007 in there.
What's that?
Danny looks like 007. That
you
picture of Danny and Peter.
You got a Danny crush. I'm telling you right now, you got a Danny crush.
I want to go fishing with him.
He does look. Maybe he could be the new 007, since obviously the franchise needs one.
Is this some kind of euphemism? You want to go fishing with him,
Dale? I'm gonna pass it over to you because we're really bleeding into your interview time. So
yeah, and it's great to have Chris here. You know, he's been a dollar bull since '90. Looking forward to talking to you, Chris. Team, thank you very much. God, you know, a year or so we were praying for this, right, Blake? You know, currency volatility,
yes,
and here we got it, man. Hang out with us. We were made for these days. We've been prepping all our life for this market. All right, so Chris, I think I have you unmuted. How are you, buddy?
Hey, I'm doing great. How about yourself, Dale?
Good, Chris. So you know, I let the viewers and attendees know you're bullish a dollar, you know, right around the 90 level. So this was your kind of year, Chris, because you were a bear in equities. You're kind of your wave stuff was talking about declining markets, deflationary type markets, and this must have been a pretty good year for you.
Yeah. You know, things kind of happening the way I was expected. I don't know.
You want to share your screen, bro?
Do what?
You want to share your screen?
Yeah, let me get that up there.
Show a few of your counts up here.
Yeah, let me see if I can find that again here. I've got a different laptop here, so I'm trying to figure it out.
Okay.
Let me see. Where's that?
You know, you got to make these interviews count. They only come up every 3-4 months.
Man, I tell you, right?
But
where is that?
Time flies.
Let me see. I cannot find the button here.
Here on Zoom, it's at the bottom of your
Yeah.
cursor is the bottom of the screen, green button. Share screen.
I don't.
Are you calling
I don't
in?
see. No. I'm on my computer here. This is weird. I do not see it anywhere.
You don't see a share screen at the bottom when you?
I sure don't. I've got participants, Q&A, chat, show captions, raise hand, settings.
That's weird. Let me see really quick.
Did you unshare, Blake?
No, I'm gonna see if I can do something really quick before I have to cut out of here. I just want to make sure that he can share.
There's nothing wrong from our side. I mean, nothing has changed.
Yeah. He's a panelist.
What platform are you using? I mean, which device are you logged in from?
Yeah, from a MacBook.
No, it should work just fine from a MacBook.
Yeah.
I mean, you are a presenter. You are a panelist, so that's interesting. I'm not sure.
Yeah,
that is strange. Well,
okay.
Dale, maybe you can show your screen.
Yeah, that's what I'll do.
All right.
Okay, so yeah, you
have a great
numbers
interview. Sorry about that.
Yeah, you have. Thanks for trying, guys. You have numbers in mind. You know, the end's hitting some of my targets. What are you looking for in the dollar now, Chris? Are we in a topping phase here, or are we do you have higher numbers still?
Yeah, so I think the yields there on the 30-year and the dollar are kind of really shouting that I think we're coming up to a top here.
Okay.
Yeah, so I mean,
can I use a TLT as kind of, you know, as a proxy, and here's your 10-year. So, you know, a little double top at 4. You think we push above it maybe on CPI tomorrow, but we're close to a reversal. And this is interesting. We're making new highs in yields, and you know what everyone loves is not making new highs. The dollar.
Right. Yeah, exactly. I mean, if I look at the DXY there, I mean, my current count says, okay, we've got a little bit higher to go. I think we're looking at, let me see here. Well, there's that R5 pivot on the weekly. They're right around 115.85.
Okay.
And if we jump up beyond that, then I've got 117.72. And I think so. If we break out through the swing high there at it's right around 114.778. If we break out above it, those are the two targets I'm looking at.
What if we don't?
Convinced yet that we will, though.
Everyone's looking for one more jiggle to new highs. You know, I've seen this movie before, and I could see why they would. In fact, I should be, because these highs are confirmed. Well, markets
Right.
rarely peak when you have, this is my theory. I'm breaking my rules. My rules would say, don't get short the dollar until it makes a new high without the RSI. Kind of
Right.
like what the yen is trying to do right here on the daily.
Yes. Yeah.
Here the yen is not confirming. But I just
Right.
think there's so many people trying, there's already 92% bulls in the dollar on this rebound. And I just don't know if it has the juice. What if we get a surprise on the CPI? I mean, everyone's getting so conditioned to expect nothing but negative inflation news. Could there be an outlier?
Yeah, and that's exactly my thought. So at the beginning of this year, what I kind of spoke about there, I do my YouTube live streams there a couple of times a week. And I had said, okay, in January, I said, well, it looked like we were going to probably have a housing market top there at Q2. And then I said, we'd see, the interest rates continue up through the year with the big hikes, probably 75 basis points, maybe even 100 basis points through the summer. But then I was looking at us finishing off those, not having any more of those come around the end of Q3, beginning of Q4. And so that's kind of where we're at now. And, and so we look at this and we see everything's coming up. And I've been talking about the last month or so about the likelihood that we'd see a surprise to the downside with CPI potentially this time around. So, yeah, I mean, that all kind of lines up. That's why I said, if it breaks out, those are the targets I'm looking at.
Right.
But I do have a different count that kind of says that the top may be in. So I think either way, I think we're probably pretty close. On those 30-year yields, I've got us at the end of a wave 5, trying to finish out there. Yeah. And we're near the R5 pivot there on the weekly as well. So just kind of some confirmation on that, it looks like.
Okay.
But, nothing guaranteed, but.
Nothing, no. So, if you, what do you have underneath it? Say, for example, these are the highs. We take out 110. This is when people will recognize that the dollar's in a correction phase if we take out 110, right?
Yeah.
What are some of your downside S1, S2, S3 levels?
Oh, I'll tell you what, if this is the top, I mean, I think we're going down mid-90s at least.
Okay.
I see this as the end of the, a series of 5 waves coming off that whatever that was, 88 low. So, I mean, I think we've got a significant, pullback coming in, if this happens.
Or a new bear market in the dollar, possibly.
Exactly. We're just kind of at this weird area. So, when we talked about the S&P, and that's kind of been other than the dollar, the other big thing I've been talking with you about, the idea that maybe we're sitting into this big kind of depression kind of coming in and whatnot.
Yeah.
And I mean, we're still heading down overall. And so you still have to kind of keep that in mind. But the longer I sit here and look at it, the more concerned I become that at the top there that we had, whether you're looking at the NASDAQ in June or you look at the S&P and the Dow there in January, it wasn't anything spectacular at the top. It was just kind of like this rollover. And, using Elliott wave, we're looking supposedly at a grand super cycle kind of top. And so.
Yeah, where was all the impulsive action and why didn't the VIX ever blow up?
Exactly. You should be looking at some sort of blow off top. You're talking about the fifth wave of the fifth wave of the fifth wave kind of idea, this over exuberance, and we didn't see that. So I have to be honest, I'm kind of sitting here going, well, do we have one more push up? Now, if we get a drop here below the lows we're at, I've got a count right now that says, that move down you've got to your black line down there is a leading diagonal for a wave 1. The move up to the red line and the green line there is a wave 2. And then off that, I've got us working on a 1-2 smaller interior. Yeah, right. Coming through here. So if we get a breakdown below the swing low here, and in all thoughts when we're looking at it, I mean, that should be a big wave 3, which means it should be a huge push down, a hard push down, kind of gets everybody's attention really. If we don't
the recognition phase of, oh God.
I'm the wrong way. It's not going up, So if we don't see that though, then that really keeps me cautious about the idea that maybe we do actually still have another push higher. And that would seem to make sense, if the dollar's reversing. I mean, what kind of catalyst
exactly
pushing it down,
Yeah. So if it's a wrecking ball, maybe it could also be the glue that patches different financial markets together again. If it falls.
Right, exactly. Yeah. So that's kind of where I've been here the last few months.
So then your tune might be changing in gold with that outlook. No, it isn't.
Nope, still not.
Okay.
Nope.
And silver, $10.
Silver. Yeah, still looking at it heading down there. I mean, I guess I could see a scenario in which it doesn't. Kind of goes more along with what everybody else tends to think, but you know me, I don't look at it that way. I don't look at gold as an inflation against, hedge against inflation or anything like that. I just see it as a tradable asset. Don't really see a whole lot of reason, for people to be buying it really at the moment. And so, I mean, other than right now, I expect a little bit of a push up, probably up there around, what do we got there? Probably around 1840 or so, at least, looking at like a flat correction. So that would be wave C heading up.
Doesn't it look a lot like the S&P?
It does. Yeah.
And don't a lot of these charts in different asset classes, it's pretty much all one market driven by the dollar, and the only difference, there's no differentiation.
Right.
Even grains, Chris, don't you think? I mean, why should Fed tightening have impact on the corn market? And they all look the same, or wheat or beans. Are people eating less because interest rates have doubled?
Right. And that's the whole thing, so we keep going back to the dollar, and I just, I mean, like I said, as far as gold and silver goes, I could be wrong. We could see it.
Yeah, we all could be.
Pull back, but I mean, I think at the end of the day, I think the story is, the dollar. I think, again, as I told you back when we were down there around 88, and I said that looks like at the bottom there, and we'll be heading up toward this area. I said, this is a story right here. This is where it's at. As long as this thing's rallying up there, everybody's going to deny it at first, but once they kick in and everybody goes, oh wow, here it goes. Well, everything else is going to be affected pretty negatively, and and so now we get to this point, and as you mentioned earlier, what would you say, 92% bulls there on
the DSI? Yeah, 92.
Yeah. And so that was part of my exact reason when we were down at the lows there, where I said, well, it looks like this is probably the low. We had just about 92 or 94 as well, but they were all bears. Yeah, exactly.
Yeah, right.
And so
we've come a long way in a year. Couple years, really.
Yeah, year. Gosh, it's almost been 2 years, man.
Yeah.
That was January of 2001 or 2021.
Okay.
So yeah. The dollar's had a great rise here. Unfortunately, a lot of people didn't want to do it. So
can we dissect it? Do you look at the pairs within the dollar? Do you have any, different ones will display different patterns and relative strength? Do you differentiate between, say, the euro and cable with what's happening in the UK, or the commodity currencies like the Aussie or the Canadian or Kiwi?
Yeah, so I mean, Euro USD, what, 57-58% of the DXY weighted value there, and so we always watch that, and it seems to be printing pretty similar to the DXY, just the opposite, right?
Yeah, right.
Inverse. And so if you get it, I mean, if the euro rallies, then there's little hope that the dollar doesn't drop, right? The yen is the other part. It's what, another 12% or so.
Yeah.
And so if the yen wakes up and the euro wakes up, I mean, the DXY, I don't think there's anything it does other than drop. And both of those seem overextended as far as the USD strength on those sides. So, I mean, I don't think we have a lot as far as like the cable and, the loonie and stuff like that go to really kind of impact it. So, yeah, I mean, I think Euro USD and the USD yen are probably coming to near their ends there, and that would align with the DXY as well.
Okay. Any view on WTI now that we know that the Saudis and OPEC are our friends?
Oh yeah, that's funny stuff, right?
Yeah.
So
I've
still, man, I'll tell you what, I've still got a 1-2 coming off that top there. So I've got a 1-2 and then, you know, working on a wave 3 here basically. So I've got us at quite possibly the top back over there around 130, 128, whatever that is.
And we could have a bear market rally into the hundreds and then roll over again, Chris?
Yeah, that's exactly what I'm looking at the moment. Yeah. Now, you know, we look in there and everybody's been talking, man, they've been talking about $300 oil for, it seems like a year now.
Yeah. And you're from Texas, so you know oil.
Yeah. But you know, I don't know. If everybody's, you know, if everybody's correct, which, you know, they rarely are, right? But if we go into this big, huge downturn with the markets and whatnot, well, why the heck would oil rally? I mean, you know, companies are already letting people go. They're already stopping their hiring. They're slowing production. I mean, so what's the use case? Why is oil going to be there? Travel will be down. You know, where's oil going to go? How do you get $300 oil, you know, when everybody's not using it as much anymore? So, you know, I don't know.
Lockdown. Yeah. All right. Well, interesting. Is there any line in the sand that could get, because I know there are some wave counts that said that, you know, we could hold here and even rally back to 4,300 again or so, and then roll over and crack.
Mm-hmm. Well,
like it's a flat or something, and then we're going to pop again.
Yeah, well, if it's a flat, yeah, we're going to expect it to rally up above that, you know, that 4,300, whatever that high is right there.
And then
you know, we'd expect that. But I think if we are breaking out above that, I think at that point, that's where you at least get cautious about further downside.
Right.
You know, again, like you said, could be potentially some sort of flat playing out, but you should definitely be a lot more cautious about downside if we do break that and, you know, head up a bit higher there.
Yeah, we'll have a breakout back over that 4,200 level. That was pretty important on the way down, 42.
Mm-hmm. Mm-hmm.
So
yeah, exactly.
Okay. Well, it looks like we have some important market history to look forward to, and it actually reinforces my views when I'm on the same side as you, Chris. I watch your,
well, I appreciate that.
Not that I would cover if you weren't. I would, you know, I'd say, well, let's see. Mr. Market proved me wrong, but interesting that we're talking about this. And, you know, there have been some articles on the dollar, you know, kind of like the curse of being on Barron's or Time Magazine.
The cover.
I saw the wrecking ball, and I don't know what magazine, the dollar, and you know, the dollar is like gold now, and there's a lot of this, you know, kind of you know, peak mania stuff you get at turning points.
Exactly. Yeah. And that's, you know, that's, you know, you know, I guess if you're looking, you know, at things that just another thing that says, hey, maybe, you know, maybe it is done or nearly so there. Yeah.
Okay. And one thing you may want to look into, every bull market in silver came with a bear market in the dollar. Just something to think about. And this gold silver ratio, I don't know if it means anything to you, but you know, this was a pretty big turn, and 50%, you know, looks like a bear market rally that would favor silver. Anyway, I'm into silver this year, man.
You're into silver this year?
Yeah, there was backwardation before this last rally in silver that you usually don't see. So anyway, I think it's hated enough. I think people have tried to buy the precious metals long enough, and not, you know, what you hear now is they don't work anymore.
Right.
Okay, well, you know, it's the opposite of the dollar.
Well, you know, I'm over here, you know, I keep an open mind, and you know, worst thing I can say is, you know, if I'm wrong about where gold goes, well, I've been right long enough to make enough money on it so far. You know, and I'm open for it to be wrong and to continue with the other way. That's perfectly fine as well. You know, again, to me, it's all just tradable assets. So
right.
Yeah.
So would you advise people to go to a commercial bank and exchange in the US? Are you doing it and going with different fiat, sitting in cash and different fiat, or just shorting the Dixie?
Yeah, well, the only place you're going to be able to do that, there's the ICE exchange. You do the futures on the Dixie there.
Yeah.
But yeah, I mean, however you want to do it, I don't think you can do it wrong, really. I just think that if you find a lot of people are just going to find themselves on the wrong side. It's the same story it was at the bottom, just the opposite. Everybody was bearish, now everybody's bullish. It can't stop. It'll never stop. 160.
Yeah, you're talking about traders, so I'm talking about, say, people that aren't traders and they have 6 figures in their accounts.
Oh, okay.
And it's all denominated in dollars.
Right.
Their investments might work, but they're unhedged in dollars. Shouldn't they be considering diversifying out of dollars in this time frame?
Oh yeah, exactly. Yeah, I mean, if that Dixie there's topped out, there's no little reason to kind of keep dollars there, at least as far as things that you're trying to hold for a bit, because you're just going to lose that purchasing power on it, that value on it. So yeah, definitely.
Okay, well, since you can't show your screen, let me do this for Chris so that people know where to find you.
Appreciate it, Dale.
You changed the name?
Yeah, when we go back and forth, we got a lot of stuff going on right now. We're going to be launching a whole bunch of stuff, and so this has been the main site for a while. So this is still probably the best place to join us. But we're actually going to have a full-on coaching service coming up here, performance coaching for traders and whatnot, and a few other things coming out. So yeah.
Okay. All right. Well, we're making a little, video history that the long-term bull for the last several years in the dollar is open to a turn, and it could be a major turn, and is a little less bearish with the action we've had in SPX, that there could be a rally from here, and the dollar holds the key for everything here.
That's about it. Yep.
Okay, so you could find Chris on Twitter at TX West Capital right here, and howtotradetowin.com. Check them out. Congratulations, Chris, on a great forecast being bullish a dollar, and I'm hoping, I'm positioned that you're right on the reversal as well. So
I appreciate it.
I'm hoping you're right.
Me too. Me too.
All right. Well, great talking to you. I'll get back in touch with you, Chris, on Twitter, and appreciate you, showing up. I know you're away on work, and it was great talking and catching up with you.
Always a good time, Dale. Thank you so much.
All right, everyone. Christopher Inks at Tex West Capital. Could join the team in about 18 minutes on the Morning Edge. Good hunting, everybody. See everyone tomorrow. Don't just count your pips or your dollars or your Swiss. Count your blessings. See you tomorrow. What's today? Wednesday. Okay. Yeah. See you tomorrow. Adios. See you, buddy.
All right. Bye.